Hello, I'm Finola Burke from RaaS Research Group, and we're focusing today on advanced materials manufacturer, Amaero, ASX ticker 3DA. Joining me to discuss recent developments is Chairman and CEO Hank Holland. Welcome, Hank.
Hello, Finola. Thank you very much.
So Amaero has just announced it has entered into a 5-year exclusive supplier and development agreement with ASX-listed Titomic, ticker TTT, for refractory and titanium alloy spherical powders. This deal puts Amaero at the forefront for manufacturing mission-critical part production. How should we be thinking about the opportunities this relationship can develop?
Great. And thanks again for taking the time, Finola. I think Titomic is a continuation of a strategy that Amaero has been very intentional with, and that is aligning with key leading players in various verticals. At the end of the day, Amaero's objective is advanced metal manufacturing and all the modalities of advanced metal manufacturing. You might recall we began over a year ago with a long-term agreement that we announced with Castion and Adman. Castion and Dr. Yuping Gao being the foremost leading technical expert for printing C103 and refractory alloys. We followed that with a long-term agreement with Velo 3D, the only made in USA metal 3D printing OEM. And now with Titomic. Titomic is important and they play a leading role in cold spray. Heretofore, much of Titomic's business, was selling the equipment sales. And then where they actually manufactured or did parts, it was largely on repair and maintenance, of which cold spray has long established itself. For repair and maintenance, actually, it's better suited to use angular or non-spherical powders, which are much less expensive than the spherical powders such as Amaero produces. Now, though, Titomic is moving to qualify end parts, be it pressure vessels or other type of end parts. And the importance of qualifying those parts is it will be very particular, the material specifications provided by the defense primes. So we now have a number of examples of which Titomic has come to us and asked us to provide powder. In all cases, the defense primes are requiring spherical powder, which makes sense given that spherical powder is much more established from a material property standpoint, and it's got more consistency of properties. So when you're qualifying these parts, not only you've got to qualify a single part that it satisfies the necessary material properties, but also you've got to have reliability that you can continue with the consistency of that production going forward.
And Hank, you've estimated that from a revenue perspective, this agreement will deliver around 5 to 10% of FY26 revenues, which is not unmeaningful given that you still need to achieve certification over the course of the next 12 months. As the partnership matures, what sort of contribution could we expect on an annual basis?
So if you look at Titomic is given financial guidance of $750 million of revenue in FY30. Obviously, we don't know a lot about the basis of that guidance that they've given. But if you were to begin with that, the majority of that revenue would be in high value materials. So refractory and titanium, they would continue to have stainless steels and nickels and copper nickels and so forth. But the majority from a value standpoint would certainly be in refractory and titanium. Moreover, about 50% of the cost of good is actually powder. This is similar to what we see on the PM HIP side of our business. So if you quickly did the math and just roughly speaking, you took half of 750 and half of that, you could quickly get to a number that was well in excess of $100 million of powder, spherical, refractory, and titanium powder. Again, we've got no way of commenting on their financial guidance of $750 million, but I think it does illustrate cold spray because it uses a lot of powder as far as quantity. This could, in fact, over time be a significant customer. Obviously, we want to see Titomic be very successful. The more successful they are, the larger powder demand they would have from Amaero.
So Amaero has just completed a $50 million strategic placement, and shareholders are currently being offered an SPP on the same terms. Having already raised sufficient funds to meet your CapEx needs through to EBITDA break even, why did you decide to raise these additional funds, Hank?
Yeah, here too, a great question. So the board met the Thursday morning before we announced the capital raise. And as you said, the company had publicly said on a number of occasions that we were fully funded fully funded to fund a $72 million Australian capital expenditure budget that we had that we will finish in FY26. That was a 3-year plan, and fully funded to achieve positive EBITDA in FY27. What the board conversation that Thursday morning was, and we were advised by a number of investment banks, was obviously there was a lot of interest in our thematic space, be it defense, industrial base, onshoring of manufacturing, critical minerals. And we had received unsolicited interest from a number of investors as well as investment banks. At the very same time, what the board said, well, that's all well and good, but from a use standpoint, what would we do with this? What growth initiatives could we accelerate? And one thing I think that Amaero has established is we've been very disciplined from a capital allocation standpoint. So prior to this raise, we raised 98.5 million Australian, going back to May of 22. So over about a 3-year period of time, 70 million of that is on our balance sheet today in the form of tangible assets and cash. So again, as the largest shareholder, I'm very focused on non-dilution, if you will, very focused on disciplined use of capital. And yet the board felt we're now 2 years into commercial engagement. We now have good visibility into FY26 revenue, which we've given some prior guidance on. And as a result, it felt it prudent to pull forward some growth investments that we had planned in later years, FY27 and beyond, maintain its cadence of commissioning 1 atomizer a year. So by doing this, we'll pull forward the 4th atomizer, order that by the end of this year. We'll commission that in June of 27. That will follow June of 24, June of 25, and June of 26 for the first 3 atomizers. In addition to that, we've said we already are the lowest cost producer in the US for spherical refractory and titanium powder. We will also pull forward an investment in argon recycling. In doing so, it will reduce our unit cost economics for titanium spherical powder by about 10%. So further enhance our cost advantage on the rest of the marketplace.
Now, you've also just provided updated financial guidance to the market for revenue from 30 to 35 million Australian dollars for FY26, and for that split to be 40% in H1, 60% in H2. As you look at your strategic business plan, what could upset your current outlook and guidance, Hank?
Yeah, so let me first comment on the guidance we've given and then come back to your question about, what are the risks, if you will, or what could upset that. I think in general, we won't necessarily want to be in the business going forward of giving a lot of financial guidance. Rather, what we'd like to do is help analysts such as yourself understand the foundational aspects of our business and let analysts do that work. At the very same time, we're clearly at a critical inflection point of our business, of going from very little revenue, last year less than $4 million, to significant first year of revenue. And as you said, we've now given guidance of 30 to $35 million Australian revenue expectation for FY26. By the way, that's where analysts were prior to, and we're confirming that. We have very good visibility. As we said, we now have contracts signed for about 90% of the revenue that we have planned for the first half of this year. As you suggested, we've also given guidance. We expect about 40% of the contribution of the entire year's revenue will come in the first half. So on that basis, we felt it was important to give investors and analysts more specific guidance for the year. I don't think we have a lot of risk for FY26. Again, a significant part of this is already contracted via our 3 long-term agreements, coupled with significant purchase orders that we have in place today. If you say what could disrupt that, what are the risks? The nature of our business is that we're dealing with long planning cycles, whether it's in DoD or defense primes, whatever the case could be. And so it is always possible that you could see a delay in some of that revenue, right? And I think that's one of the natures of our business. We've tried to plan for that prudently. We've tried to plan for that conservatively in the guidance that we've given. So notwithstanding that risk, we feel quite confident in FY26 guidance.
And now you have in place, Hank, 3 very important partnerships in Cassion Admin, Velo3D, and Titomic. Are there any other gaps in your future production capacity that could benefit from additional partnerships? And what could we expect to see to emerge over the next 12 months or so?
Yeah, so again, a great question. What we'll continue to do is focus on leaders in various verticals. So as you mentioned, we've got the partnership with Castion and Adman which is the leader for printing C103. Within metal 3D printing, there are other important verticals. So take medical, right? The largest single titanium powder consumer in the world is a medical company. And so we are engaged currently with medical companies. We'll continue to look at more there. That's an important opportunity for us. Other immediate opportunities, the suppressor market in the US is a large 3D printed titanium opportunities. And so you might imagine that we're engaged with companies that are leaders in that field. And there are other what we call high throughput additive manufacturing opportunities where you've got certain manufacturers that are focused on high fill rate, so very dense buildings, if you will, plates, and with high industrial throughput. So there's other areas, even within laser powder bed fusion, that we could identify leaders that we'd want to partner with. Likewise, PM HIP, albeit we've got proprietary capabilities, there are other significant opportunities there, as well as adjacency capabilities that you could see us look to get more actively involved in also.
And Hank, finally, in the next 6 months, what milestones can investors expect to see achieved by Amaero?
Yeah, most importantly, given this transition point that we've got FY26, is that we successfully scale production. This very first quarter, we will have a very significant production jump from the prior quarters where we were less than one shift on one atomizer, now going to multiple shifts on multiple atomizers. We've had some key hires as it relates to manufacturing as well, and we will update the market on this at a later date. So A, do we successfully scale production? And then B, as we continue to announce other commercial contracts. I think those will be the most important milestones to watch for the first half of this year and the continuity and the balance of FY26.
Well, thank you, Hank, for your time today. I'm looking forward to checking back with you over the course of the next few months to check on Amaero's progress.
Thank you very much, Finola. Take care.